So recently, in the last few days, you've been hearing me say that things are going to be looking like they're going to rebound within the US economy. And you may be asking, well, how do you know that's true? Have you been seeing some data? What's going on here? Well, obviously, I've been showing you a lot of graphs of Delta cases coming down. True, that is an indicator. But is there anything else that we can see to let us know that things are looking more positive? We're going to see more reopening in the future, which will help inflation expectations in the future. Well, there's one which I used to use quite a bit in August, and I'm going to bring it back now, which is the Citigroup Economic Surprise Index, which basically is an index that takes a look at U.S. economic surprises. And if they edge down, generally there's a relationship between this and the U.S. 10-year yield. Remember, as the yield rises, we should expect inflation. So if we see the economic surprise index rise, we should expect to see the U.S. 10-year yield rise as well. So what are we seeing? Well, we're seeing the U.S. 10-year yield rise. So doesn't that mean the economic surprise index should be rising? Well, if we scroll down, you will see that just that is happening. Here is October 1st. And even before then, we start to see it rise. Now, remember, we start to see the U.S. 10-year yield rise around September 14-ish or so. We definitely hit a bottom at September 13th. And that's right around the time we saw a peak in Delta cases. So I'm sure right around that time we start to see a inflection point. And since then, we've probably been rising here in the surprise index. I haven't been looking at it until today. So here we should be expecting that U.S. 10-year yield should be rising along with it. And as we see here, this is the Citigroup surprise index in the red, 10-year yield in the blue. And as you see right here, they are rising in unison. So if things are going to be looking positive in the future, which I think we can expect that to be the case, then the 10-year yield should be rising. And as you can see here, it has a long way to go. The 10-year yield tends to be around this, or between the 70 and 90 range here on his chart. And we're in the negative territory. So I wonder where that will leave us in the future, because if the 10-year yield gets that high, that's pretty impressive. So I believe the highest we got in recent times was around like 1.7 or so. We're at 1.4. So perhaps maybe that's where this is, around 1.7. So if we get up to 1.7 again, some people even think we're going to get up to about 2 by the end of the year. So if we get up to 2, then I definitely think that we should start to see that play out in gold prices. And then hopefully by that time, we'll see it catch up in silver prices as well. But here we are today. Gold is pretty much retesting that resistance level where the Fibonacci's are, around 1770. If it gets above that, then I think we're in good territory. Consistent in closing above it, I should say. Then we're in good territory for it to then eye the 1800 level. So guys, let me know what you think about this in the comment section below.